Okay, here we go, guys. Welcome to the monthly IBD Meetup overview. My name is Roy Maddox, and my son Wes, who is also my partner. We are hosts and facilitators of this meetup. So we certainly hope that you'll enjoy the meetup tonight and that you will understand some new techniques, new tactics, new things that you can add to your investing and trading regimen. So hopefully these will be useful and employing to help you make some money. If you're not on our email list, Wes will drop a link and we will send you our comments plus the slide deck and plus a copy of this meetup when it's over. We are a private group of over 2,000 investors. I think we've got 2,300 members now. But we believe with 100% certainty that we can change our financial lives and change our financial destiny. And that's possible by purchasing a few of these true market leaders and concentrating in these true market leaders. There are obvious times to be in the market, and there are times not to be in the market. We vociferously, that's a large word, disagree with the buy and hold approach. It only takes two devastating bear markets and you're wiped out. And we think that there's a time based on the methodology that we utilize, there's a time to be in the market and a time to be out of the market. Tonight, the members graciously are attending and will be inputting throughout the presentation tonight and interjecting some of their comments in the meeting. So we always welcome our members' commentary. We think that makes for a very robust and vibrant learning experience. So be sure and pitch in. We're going to focus on a combination of technical and fundamental factors that really are found in the book, How to Make Money in Stocks by William O'Neill. I met Bill O'Neill in 1988 in Houston. It changed my life. And I've been on a 35-year quest in terms of trading the market, investing with canceling techniques, and have seen it all the ups, all the downs, the bull markets and the bear markets. So hopefully you can draw upon that experience tonight to learn something new or something that may accentuate what you're currently doing. Tonight's agenda will be divided into two sessions. I'll make some introductory comments, then Wes will take you through the slide deck. The second half of the program, which I'm very excited about, we're going to be talking about Eric Wish's green line breakouts. We think this is a novel concept that will serve us well in 2024 in identifying these true market leaders. So with that being said, let's go ahead and get started with the presentation. And certainly this is our disclaimer. The material in this presentation, of course, has no regard to specific needs, wants, goals, and it's not to be construed as a solicitation as well. And so just take a moment in terms of taking a look at the disclosure. IFS principals and employees and clients will many times have meaningful positions in the stocks that we're talking about tonight. In fact, Wes and myself many times are investing right alongside of our clients. We own the same stocks, just in much larger amounts on a concentration perspective. Okay, what exactly is CAN-SLIM? The CAN-SLIM, the acronym, it represents the most important elements that go into a successful stock. Bill O'Neill determined those characteristics through a study that he made, and I think the study was between 1953 and 70, Mike Webster, Chris Gessel, a number of these guys that worked for him over the years have taken that study and made it exhaustive in terms of going back really to the 1950s and all decades to identify all the great leading stocks, and many of those stocks had these characteristics. So current earnings, we're looking for earnings that have earnings growth on a quarterly basis of 25% or more. Many times the stocks that we identify on the presentation tonight will have triple-digit earnings, which makes it even a more stronger candidate to end up falling in that lofty land as being designated as a true market leader. Annual earnings. The acronym suggested that companies should have a 25% earnings growth for not just 1 year, but 3 to 5 years. They should also have return of equity of 17%. Investors Business Daily is a powerful research tool because it equips us to be able to compare one stock to the other based on their proprietary earnings per share rank and relative strength rank and composite rating. And the composite rating is really a powerful screening tool, which allows you to see what are the strongest stocks in the database based on sales, based on revenues, based on margins, based on return of equity, based on industry, group strength, relative strength, and so forth. The N stands for new products, new trends, new highs. We'll be talking about a novel concept today, and those are the all-time highs, not just the 52-week highs, but the all-time highs. And we will find that some of the most powerful stocks of all time, they all traded into all-time high territory. So again, the key right now is to identify some of these stocks that are on the launching pad and others that are firmly in all-time high territory. And let me say, there's not many. So it suggests to me that we're so early in this ball game for the breadth to increase, for new highs to again proliferate and have just rotation and a great new group of leading stocks. And we think they're primarily going to come from the small and mid cap area. And we think that, you can potentially get this rotation out of the Qs, of course, but it's not going to be easy for them to get rid of their leadership because they're so liquid and their earnings are so visible that they could again continue to lead on this next leg up as we celebrate and participate in the AI breakthroughs that are on the horizon. The supply and demand report is concerned with the volume of the stocks. I also like to use an indicator when a stock is up 10% in price and value is up 300%. I call that a 10-300 indicator. And that indicator has been described as identifying some of the great new true market leaders when they launch off of their starting pad. Leadership return refers to the industry group strength. Bill found that the most powerful stocks typically were in the top 4 to 5 industry groups. And you can see right now IBD, the IBD 50 that index is breaking out, and we're having more and more stocks that are participating that have growth characteristics, which is very positive. I stands for institutional support. Institutional support, you've got to have Wall Street behind the companies. You've got to have Wall Street being effusive in their praise and recommending the stock over and over again. That's what drives stocks higher. It's institutional buying. And so Wes and I, we often talk about the three legs on the stool of an investment process. And we believe that you could look at technical analysis, fundamental analysis, and macroeconomic analysis in terms of have it put initially in broad strokes, looking at this, and then getting down to the specifics in terms of each of those characteristics, in terms of what should you buy and when should you own it, and so forth. Technical analysis, we utilize concepts like the moving average, convergence, divergence indicator. These are useful. Some people, in fact, many esteemed traders don't use any of these technical analysis tools, but we do find there's some use and merit in being aware of them, because it gives you context in terms of what the market is currently doing, where it's at, and where it's going. And Wes will be talking about a number of these concepts in the slide deck as well. I guess the most important concept is trend. We are actually trend followers. And we believe that the short-term trend is in an uptrend when the 10-day EMA, or exponentially smooth average, is above the 21-day. And we think that the market is an intermediate term uptrend when the 21-day is over the 50-day. And we believe that the market is in a long-term bull market when we're above the 30-week for 2 consecutive weeks. And also the 30-week moving average is actually turning up as well. Some more bullet points on fundamental analysis, and then macroeconomic analysis. We subscribe to Keith McCullough from Hedge Eye Research, who provides us with some useful information in terms of what's going on with the economy, what's happening with GDP, what are the inflation projections, and so forth. And we think that that's useful as well. And again, you can find him at hedgeeye.com if you'd like to get additional information regarding his quads and identifying his growth investment and policy model, his GIP model. And with that, let me turn the presentation over to Wes, and he will take us through the slide deck. Wes, go ahead.
All right.
And let me stop sharing.
Yeah. You. Okay. So yeah, I'll pick up there. We've been talking about and contemplating, the pullback, what it's going to look like and everything when we get it, and kind of our one of the things we're looking at is the seasonality that we know is not exactly favorable for the first half of this year. This is the composite cycle. We kind of look at this regularly. This is taken from Minervini's stuff and Ned Davis research, and it's an average of what the market does on an annual basis, the 4-year presidential cycle, so depending on what year we're in for that, and then the 10-year decennial cycle. And so, what he's been talking about, and what he was right, I guess Sunday, right? We're all kind of anticipating a pullback and thinking about how deep it might be. He highlights this part in April. I don't know. I mean, seasonality is, I think generally maybe it's unfavorable for the first half of the year until clearly that's what it shows. And then, there's always some fear around elections and maybe some selling ahead of that, which is an overhang on the market up until the election's actually resolved, right? Because everyone just hates uncertainty. But this is what we kind of contend with for the next several months. See if leaders hold up, right? And hopefully they do. And a lot of them will talk about showed a lot of relative strength today, as an example. But this is what we're, the context of where we are this year. And I also put this chart together just to isolate the kind of the election year composite. It actually shows that there's, again, it's a really similar chart, just sideways action for the first 6 months of the year. but it's updated also for today's move, which we know is a meaningful move in the S&P in one day. And so we'll go back and we'll touch on CPI again, as we always do, because this always seems to, these weekly or these monthly meetings happen in the same week, typically. So I just wanted to put this out there, right? That we had this real negative reaction, and I don't want to belabor the point about how, maybe the negative reaction and the spike in rates is maybe it's overdone, but here's the CPI in blue, right? So it decelerated to 3.1% again. Right now, the updated forecast is about 3.0 in February. And I just wanted to point out that there's a big divergence kind of building. It's a big enough gap to pay attention to, I think, where the PCE is actually coming into 2.2%. And the PCE index is what the Fed always says is their preferred measure. And so something to consider, when that comes out as well. If it's going to diverge, maybe the CPI is just going to play catch up over the coming months. And I've talked about this a few times. I won't harp on it too much, but okay, the core is coming down still. It's got another 2 percentage points to go, but we know that the shelter is still a big portion of that. It's about a third of that core number, and so this has a ways to go, and it's a very lagging indicator. And we know that real-time rent and housing data shows that this is already normalized to something around 3%. So to me, again, just a reminder, we got this negative reaction to data, and to me, this is what drives it lower over the coming months still, and we'll see. But obviously, there's a lot of different potholes you can hit, and we won't get married to this stance based on what we think data should or could do. But and we'll look at the rate response, which kind of is telling you that maybe maybe we're back in this prolonged worry of rates staying super high for longer. It might just be an adjustment, a short-term adjustment. I threw this out here this time. I know a member of ours has highlighted this data probably maybe a year ago, but I think it's interesting. I watch it intra month, right? So I watch it like every week or so. We'll pull it up and just see what it's signaling, because of course the correlation is real strong with it. And so something happened in the data here recently. I'm not exactly sure what, and I actually saw a few economists on Twitter talking about it too, saying, what happened? Why did it drop off so much? But it's an alternative data source for real-time inflation that gets updated every day. So directionally, I just look at it to see, kind of confirm if there's data out there that's corroborating if inflation is still slowing. Okay, and the big adjustments that are happening in the market, it's all about rates, right? Again, we see the big rate moves today. This is the Fed funds path for the rest of the year. And so, a month ago, that was January, we had a pretty tough pullback to the 21-day in the indexes again in January. And I think there was actually, so far, that was a harder pullback, because I don't think there was a lot of relative strength like we saw at least just one day into this today. But a month ago, we had this path that was real aggressive, and it was like 6 rate cuts that the market was pricing in. And then, yesterday, after the Fed spoke and just time has gone on, we had a more realistic rate path. And now, again, with this data point, it's showing that we might not get a cut till June, right? So we know that Powell said it's not going to happen in March. Okay, people were still kind of hopeful for May maybe, but this is telling us the earliest is June right now, based on the market expectations. And so despite what I think about CPI and inflation and everything, this is something, it's different, right? The charts on the interest rates are different. The breakdown in interest rates was certainly positive for stocks. And if it goes up again, I don't necessarily think it'll retest highs, right? I don't think it goes to 5% exactly, or 5.5 on the 1 year necessarily, but that's kind of what we're dealing with here is a meaningful upward thrust in interest rates. And you can see that also on this 10-year. This 10-year, and we were talking about this, of course, today, and it looks like it goes higher, right? Based on all, if we're buying stocks like we do, um, with, above the 50-day and the 10 days above the 21-day, and, you got this really harsh shakeout, and came up really fast and showed some strength and consolidated and broke out today, right? So that's kind of telling you if it's a stock setup, that's saying that goes higher. I don't know if it necessarily, what to expect. Obviously, with that, it's not like this has earnings or anything, but it's telling you that it's not that the move probably is not over in rates. But it's who knows where this really goes. It's just that I guess the market was caught off sides again on this.
Wes, let me make a point here. Guys, this is for everyone that's fully invested. Like the market, we're seeing that, we've had this great start in the beginning of the year, and we think we're going to have a phenomenal year. We think it's going to be much better than people expect. We're very bullish. And we think that before the year's over, you can have full participation in everything. We think that the market is going through this digestion because of the rise in interest rates today, which was out of the norm, which was unusual. And that's what, as Wes said, the market was caught offsides, or participants were anyway. So if you're in a situation like this, coming out of really, I think the first bull market coming out of the bear market in growth that we're seeing, what Wes and I deal with, and you guys are going to have the same issue. It's like we had 19 positions that were green in, and we wanted to raise some cash, but we don't want to be kicked out of the positions that we think that are up 50%, that can go up 100%, 200%. So that's the art that you all must deal with and know how to navigate through a really crisp bull market. We're going to have a pullback. And the question is, well, what's holding up in the pullback? Like, for example, CrowdStrike was up today. GitLab was green. Spotify was green. GCT was green. Lilly was green. Make My Trip was green. So you want to concentrate on the stocks that are outperforming, because when the pressure is removed from the market, these are the stocks that are going to power ahead. So you don't want to get too cute. It's, from a trading perspective, you could easily just have gone to cash yesterday, but we're trying to navigate and hold on to the positions that are profitable. What we have tended to do is sell anything that we have a loss in. And so that's going to keep you in the NVIDIAs of the world to enable you to get the payoff. So, and how you handle it and how everyone handles it, there's no right way. It's just simply how you want to handle your own situation. I just thought I'd share that with you just to provide some color.
Yep, that's great, and I'll show the cues next too, and if you can kind of take a snapshot and understand and remember that that interest rates were generally rising in 2023. The Qs also were generally rising in 2023, and so that's we know it was held up by large caps, but it kind of looks like the small caps, right, are the most vulnerable to interest rate moves, and a lot of the high quality larger cap stuff, some of them that Roy just mentioned, don't care as much about interest rates. It seems, and that was the case in 2023, and yeah, and that's kind of hopefully some stuff that does hold up like that, like he mentioned. But here's a look at the Qs again. When it broke that downtrend line in November, we definitely started to see some improvement in traction. Just noted the 3 fall-through days here, and noting, we bought the first two, got stopped out quickly, um, and bought the third reluctantly, and we've been off to the races. So, we're up. What is this? This is like 30%, almost, or off the 25% off the bottom, maybe. And yeah, so we're due for a breather. We're looking for it. We're waiting for it. We haven't bought a whole lot new, in the last 4 weeks even. Just opportunistically looking for some entries. I know we've taken some off on bad earnings reports, but it's tough. It's not necessarily over. It's not like this has to be a 1 day thing. It can come to the 21 day again. Right here, it came to the 21 day. It took several days to then turn again. So, typically we wait for the turn, to really confirm that we should be buying. Okay, here's the Russell monthly. This got whacked again, right? It's kind of faked you out twice if you've been trying to buy, downtrend line breaks, or buy this, in anticipation of going to 52-week highs. It's been treacherous. And so again, this might just have to wait for actual rate cuts. And I know Minervini also on a couple of his things has been talking about that's typically what seems to happen. You actually get the Russell outperformance, the small caps outperform after the rate cut. There's just more speculative stuff, I suppose, in there. So we're still waiting on this, and one of these times it's going to bust through 200, and it's going to go, and it's going to be the real deal. And if you built up profits and some stuff that you already have owned for several months, when that goes, that's what is getting us kind of excited. It's we've earned this sitting power, we think, and when some of the more speculative stuff really gets going, hopefully by the end of the year, or throughout this year, we'll see even more traction and everything. And the FFTY, which we use as the temperature of kind of our style, this is what's happened in the last 3 months. This is the reason, why a lot of these stocks have worked, and this is the indicator that should tell you it's working. It's up off the bottom 20% as well, 25% maybe. It made a new high, made that a new 52-week high, and it needs a breather. Here we are, the FFTY. Longer term, we'll look at the weekly again. Trying to break through this high and taking a pause at this point. Okay, and then the monthly, the FFT monthly. So yeah, we're talking about this a lot. We're looking for not even, it doesn't have to go to new highs for you to have a meaningful move, but we're just looking for this style to come into favor again with and if this is up $10, $5 to $10 again, it's you're gonna see 20 to 50% moves in a lot of these stocks that are in this index and that you probably own. Okay, and here's the IBD mutual fund index, the best in the top 20 indexes based on IBD's their track record. I don't think it's reflective of today, but it is not updated for today, but maybe yesterday. And so there again, everyone's starting to get a little traction, here, and have caught up some of their losses, I guess, over the last couple of years. Okay, and now here's the NASDAQ and the MACD on a daily chart. It's been persistently kind of sort of overbought. It's not like it reached peak overbought levels, but I guess you would say that's a negative divergence here, developing with some momentum, waning while making new highs here, and but maybe we get a sell signal on that too, but we'll see. Okay, and now here's a zoom in on the moving average crossovers, trying to keep us with the trend. It's been quite a strong trend for 3.5 months now. We have the 10-day above the 21-day. That's, sort of our short-term slash intermediate trend that we like to follow. We have the 50-day moving up nicely. So every, moving average and agreement with the trend. And, we also have our S&P model that agrees that, the long-term trend is up. That's fully invested. That's, on a buy signal that Minerva uses. And this is a shot across the bow, but um, this won't come without digestions, this year. So, okay, and another way to measure trend, we look at this 30-week moving average. This is from Stan Weinstein. If the Nasdaq is above the 30-week average, the long-term trend is up. We're starting to see we're seeing a bunch of things at new highs, and Roy will talk about all those green line breakouts, which are at all-time highs. The Nasdaq isn't there yet, but several other indexes are, and several industries and several leading stocks are already at new highs. So it's just about there, and it looks like we're taking this breather right before hopefully we do make new highs. And um, we've kind of talked about, I think, in the past, how when the market's at all-time highs is when the easiest money is made. And it's interesting that there's this huge divergence right between the Nasdaq and the S&P, and then the Russell, which is still down, I don't know, 19% or maybe over 20% now, from their highs still. So, one thing's got to give, and I think we're in the camp that small caps will catch up. It's just not their time yet. Okay, so here's a look at stocks in the S&P 500 above their 50-day. That's moving down. It did peak out where where it's peaked out in the past, right? 90% of stocks above their 50-day. So we're working off sort of an overbought level. Notice the indexes are still moving up. Some, a lot of stocks have also moved up strongly during this. So we're just working over that overbought level in that indicator, and several other indicators that we'll see. Here's the stocks above their 200-day, similarly peaked out where it has over the last few years. This can get better, this can go higher, but with a pause, this should come in as well. And then here's the NASDAQ stocks and the percent above the 50-day at 42%. We were looking at this indicator, I know, back in October to say, all right, this is, this should be enough. And this was one of the things I remember looking at thinking, okay, the low is probably in here. And I know it felt better to buy the this particular follow-through day, but the last follow-through day, after you just got kicked out, a week ago, harder to listen to that logic. But so I mean, sure, this could go lower, I suppose. It has in the past, but we don't. If it's a garden variety type of pullback, it should not go. It should not go to 20%. Okay, and the Nasdaq and the stocks above their 200-day. This also is, has a lot of room to go to the upside, taking a break. And if this is going to continue, it should turn. We're not expecting a big pullback. We're expecting something in the, I don't know, 3 to 5% range, right? We don't really know, but the thing is, when we look at the charts, I know we look at like the 21-day, and well, we're most of the way there. We're over half of the way to the 21-day for our first support level, and it's held that over the last couple of months. So and the trend does seem very, very strong. But here's a look at the net new high number. Just yesterday, we were making net new highs in the NASDAQ, despite being down a little bit. So, that's been helpful in this market. We had a little bit of a pickup in new lows, nothing huge yet. And then here's look at the net new high number over the last 5 years. And we always include this for the context to show, what the persistent bull market looks like and everything. So this one's been a little tricky. But if you think the bull market started closer to November 1st of last year, then we're just getting started. Okay, and here's the New York Stock Exchange and the net new highs. Again, similar story. Just we want to see more net new highs in a persistent, healthy bull market. Okay, and here's one of our preferred oscillators for telling us if we're overbought or oversold. And this is another reason why we're sort of long-term bullish. We were kind of ready for a pullback, kind of, not unsure if we should take some off the table the last few days and everything. But this shows you how persistently overbought we were, which is long-term bullish, right? Longer term, that's bullish. We got oversold and bounced pretty good in January. And now we're in a do nothing type of, indicator, or with this oscillator, it's not really saying anything at this kind of neutral level. But we'll see, if this does get oversold, I think that there's a good chance that those oversold levels are bought. And yeah, and we like to watch this on a daily basis too. But again, nothing jumping out here. The VIX jumps out a little bit today. That was quite a move in the VIX, hitting 18, I guess, intraday. And that is, that's one thing we need for a good pullback to be present. 18 is a high number. You saw us in the 20s when we had that nasty October low being put in. So maybe that's enough. I don't know. That is a meaningful, move in the VIX. Something kind of negative you have to contend with is if sentiment's getting getting frothy. This little pullback could suck the air out of sentiment, which would be normal. So this is the National Association of Active Investment Managers, and this is showing that survey shows that active managers are 94% long. This was reported on last Thursday, so after a day like today, you want to see hopefully some of that come down, and that'll be reported again Thursday. And then we've got the bullish and the bearish sentiment. So the bulls are at 49%. That's kind of high. It's not crazy high. It was nice to see the bulls, coming down as the indexes marched higher in January. But now we're kind of it's somewhat of a complacent bearish level at 22%, right? This is the low. This is typically where it bottoms out. So again, we'll see how that changes over just the coming days, because this can move quickly. It's a weekly data point. It's not really a great timing tool, as you can see, right? Because if you've been bearish for these 3 months, you've missed out on a nice rally. But it helps to have everything on your side, and this is not these sentiment things are a little bit frothy. But here's the net number. I always include this. This is the bulls minus the bears. So we have net bulls when this chart is blue here. And I always just like to show, okay, in a bull market, you're going to have more bulls. And in a lot of the best bull markets, you're going to have net bulls naturally. So you see that in 2003 after the dot-com bubble. You see that in the 90s persistently, different things like that. So I always like to show this as well. Okay, and then here's the put call ratio. This wasn't updated for today yet, unfortunately, but you can see, another thing kind of showing a little complacency on this put call ratio, right? When there's less puts being bought versus calls. that's showing that declining, fear, right? We're in a complacent level. Longer term, you look at like a raging bull market. Again, this can go lower, absolutely, but we haven't seen those levels in 2 years. So I'm just looking back the last, throughout the bear market where these lows were put in and subsequent, peaks in the index, right? So this is telling you, yes, we were complacent based on this, 2 year history, but again, we could definitely go lower. And this is the equity put call ratio. Again, it would be nice to see it get updated for today to see, how much of a spike. Hopefully we got like a meaningful spike, and I'll check to see if it's updated yet after this. But this has been super volatile. I don't know if it's the zero DTE options or what that's going into this data, but it's been a much more volatile indicator of late. And you can see it spiked in early January with that initial nasty 5 days, and that was a good indicator. Hitting that high again. It's so we do want to see those things happen for good bounces to occur. Okay. And let's see, we got a few more. Here's the high yield spreads, right? It's a measure of credit quality in the economy. So the higher these go, the more risk of credit defaults there are. This is not showing us anything. We kind of include this to see if there's a canary in the coal mine. Um, and as of now, no, there's no canary percolating under the surface yet. And it's kind of crazy because also 2 weeks ago, I think after the Fed reported, we knew, we saw that NYCB plummet, that New York Community Bank, but and rates come in quite a bit, probably on a little bit of fear there, and regional banks get smacked again. So I mean, that's something that we're just kind of paying that we pay attention to. Just to see, right? Because we know what happened in March of 2023 when that kind of occurred. Although maybe there's so much confidence in the Fed to backstop everything that it's just not as big of an issue. Anyways. All right, and Bitcoin. Bitcoin, another hot topic again. Let's see. This is an interesting one because, of course, we know all this volatility came around the new ETFs. And then they sold off. And so I know we sold it down here after having a position for a few months. I think we probably got long here-ish. And so we ended up selling it down here for a very small profit. We bought it back this day, I believe, because everyone was watching that 44,000 level breakout, and it seemed kind of obvious. It seemed like that was maybe too obvious, but we were talking about how so did Nvidia at 505. And so whatever, we bought it regardless on that breakout. IBIT is what we're using, IBIT now, instead of GBTC, which has exorbitant fees compared to the others now. So this is interesting. Took out 49,000 as well. Held up really, really well on a day like today, which is positive. Okay, a couple more things here with these. The US dollar, just wanted to highlight this. This was up quite a bit today, moving with rates. So that is typically not like that's usually a headwind for equities. And then lastly, I just threw in gold again, which I don't know. I can't figure out gold at all, but inverse movement to the dollar, to rates right here, and that's all really. So we've been waiting for this multi. I think it's a 2-decade breakout we've been kind of talking about, anticipating, and I'm sure that one day it'll happen, and maybe hopefully we're there, and it's a good run. Okay, that's all I have, but and I guess we'll probably take a break, but Roy can go through some of these green line breakouts that we have as well, and talk about the past ones and the current ones.
Okay, guys, let's take a 5-minute break right here, and we will come back at 7:55 and get started on green line breakouts. 5 minutes.
Hey Roy,
Yes, hello.
it's Joseph. How you doing?
Hey, Joseph.
Hey, did you see that that crazy move in Lyft after hours where they like
I did.
put out the wrong numbers? That's crazy. I've never seen that before.
Yeah, I think the stop was up to 20 at one point. It's 14 now.
Yeah,
I
someone's
mean,
getting fired in their investor relations department.
man, after hours, man, it's talk about the Wild West, right?
That happened with a firm
Yeah.
about a year and a half ago. They put out, some intern released some interim report that was incorrect before the close of the day, and the stock went crazy during the middle of the day.
You know, when something like that happens and they have to pull the comment or what have you, it becomes tainted. You know, you definitely have that questioning behind you, like, how could they release something like that's so erroneous, That's what it just makes me think of, if they're doing that sloppily, they're running the company maybe sloppily.
Yeah, I'm hoping Palantir survives this pullback. I'm in that, and I don't want to get stopped. It
Well,
looks
you have
good
a
still.
cushion, you do have a
Yeah,
cushion. We will be talking about that, so that's great. I mean, as long as you've got a cushion, I think you want to hang on to your potential leaders as long as you can. Now, if you don't have a profit, that's a different ball game. But
yeah.
that can let you sit out some of these, some of the volatility, as well. Okay, guys, let's go ahead and get started on the section 2. And we always have great feedback on the stock side because it seems like we are identifying some of these true market leaders, and many of you guys own them as well, and so we're in the right place at the right time. This concept of green line breakout, this was developed by Dr. Eric Wish, who was a mentor of Richard Moglen. And this is something that I've often traded. I've often been aware of this concept, and it's the concept of on the monthly chart when stocks make all-time highs, when they make not 52-week highs, but all-time highs. That's when you can have remarkable runs. And for example, in Qualcomm, and I traded this back in 1999 and made a fortune on this stock. And so I want to show a number of these to show you where you can identify them. So the green line breakout actually took place at the end in this on this chart in 1998. And you went a solid year and a half before you actually took out the highs. And those are powerful breakouts many times. And the longer the base, the better the breakout tends to work in terms of it working or not, with not being stopped out. And also there's the longer the base can translate into the magnitude of the move as well. So here's a green line breakout where Qualcomm made an all-time high in price. And the next true line, a green line breakout occurs when the stock is making an all-time high, but it does not exceed that price for 3 months. That means you have to have 3 down bars after the last up bar, and that's where your breakout takes place. For example, in this case, I can't actually draw a trend line here, but it would be right here at the 10 area. That's when the stock blasted after going sideways for 4 months. Now, the reason that Wes and I have spent a lot of time on this recently is because we've been looking at weekly and monthly charts to allow us to have sitting power in the crowd strikes of the world and ESTCs and NVIDIA's and companies like that we think have a much longer runway than just a 20% trade. So that's why we're looking at this. And you can see that in this case, you had a green line breakout there at 10, then you had another one there at 12. And see, you can see that if you buy this going into new high territory, it's worked every time on the way up from $2.50 to $50 to the blow off top where you had the blow off top. Another example where Wes did a better job in marking these. This is Cisco in the 1990s, and you had this amazing move. And who knows? Maybe this is SMCI's time to be the next quote Cisco of the 1990s. This was the best performing stock, I believe, in the 90s, and I owned it pretty much the entire decade until the top and the blow off top there. So you can see the key is all-time high in price, and then it's that all-time high in price can't be exceeded for 3 months, and you need to have at least 3 down bars before it goes into new high territory again. And notice, you in many cases you had 3 or 4 or 5 months before the stop as the stop base before you got a new signal. But this is ideally will keep you in those big winners. And the green line, by the way, is the 10-month. And you can see that the 10-month on these long-term charts tend to represent great support as well. And there's the 21-month that was a little bit shaky in this particular case. Oh, by the way, By the way, this is, when you buy a green line breakout and then it fails, it comes back below the green line. That's your exit signal. So you can see that you would have never held Cisco. You could have had it. You could have owned this for 10 years, but you would have been kicked out of this stock at the 2000 top, and you wouldn't have had to go through that 20 years of sideways action. The same thing with Microsoft. Microsoft went sideways for 15 years when you finally rolled over on the green line breakout. So you can see here, Wes did a really good job here of annotating these so that you can clearly see. So what we're looking for, we're looking at long-term monthly charts, and we're looking for potential stocks that may morph into something like this that can move more than 1 year, that can move 4 or 5 years. And we think that AI is going to pioneer these moves across the board. That's where you're going to see the growth and productivity and stock appreciation and so forth.
Could you please explain the 3 down bars? What was that about?
The 3 down bars?
Yes, please.
Yeah. So, and again, Eric does a really good job on his YouTube videos. You can see, and you can actually stop him in the middle of that. And so what I would do is recommend that you listen to that. But the three down bars represent 3 months of resting. A green line breakout can only happen after the stock's based for more than 3 months, and then it makes a new 52, not a 52-week high, an all-time high. It's an all-time high. Many of you are aware of the book, How I Made $2 million in the Market, from Nicholas Darvis. And in that book, he's interviewed as well. And he made all his money in that 1958, 59 period, 57, 58, 59, when we were at all-time highs in the indexes. O'Neill, on the other hand, in his book, How to Make Money in Stocks, only recommends that you buy stocks close or at their 52-week highs, not necessarily all-time highs. But it is powerful when you get these great growth stocks that put in this formation. And so we're looking for these basically. There's gold, Meta. You can see the green line breakout on Meta happened, a long time ago. So look at this uptrend, and you've never been kicked out of Meta from the beginning, from the correction there in 2022. There's Square. Square had a green line breakout in 17, coming out of the bear market in 15 and 16. This is one of the first stocks that popped up there in the beginning of 2017. And you had this great move from 17 to 100, in the next couple of years before you went sideways for over a year. Netflix, a powerful green line breakout. And, the reason that I'm pointing this out is because, I'm trying to determine, is SMCI going to give you a runway like that a couple of years, like NVIDIA and so forth? That's what we're looking at. That's why we're even looking at these. So total green line breakouts today, you got SMCI. You can see where it broke out of a 5-year base at $50. And we actually traded this from 100. We bought this at 103 and then traded it up there at 180. And we bought it and sold it a couple of times last year. So we did have a triple-digit gain in that last year, but we totally missed this green line breakout that happened 2 months ago. Look at the volume. Look at the volume 2 explosion. That is powerful. That's why, you know, this stock can't go down right now. It hasn't been able to. Everybody's expecting it to drop 100 to 200 points, but there's just tremendous buying behind the stock right now. When you get a situation like that, you never know when it's going to end. You might think that it's going parabolic, but it hasn't, this base that it's broke out, it hasn't been long enough. I mean, normally, you know, something that goes parabolic takes place in 12 to 16 weeks. This is just a couple of weeks, you know, a few weeks out to go on SMCI. NVIDIA, that's what makes us, that's what makes us very bullish on NVIDIA. This thing just took place, and you can see these green line breakouts that it's had in the past has led to significant upside. That's why it remains our biggest position. And they'll probably, when they report earnings in 8 days, it'd be a disappointment if this stock's not trading at $1,000. We'll see what happens. CrowdStrike, this is what's got our attention. This is a fresh green line breakout right here at breaking out at 300. And you're going to see a lot of these stocks that might be potential true market leaders. Some of these are going to be IPOs that had a big correction, and they've come all the way back into new high territory. And those are the leading stocks in the market that have that characteristic. Uber, green line breakout after 4 years of not making money. Now they're making money. So when you're looking at this type of setup, you're seeing a stock that it's cash flow positive, had the best quarter in history, the world's probably largest employer, and the stock's going through an all-time high price. And VRT, you can see VRT, they're in the liquid cooling area of data centers, which of course, that's where AI is being implemented the most aggressively, with generative AI being incorporated into all these software applications. But these data centers that are driven by NVIDIA processors need to have sophisticated cooling systems. That's why VRT is making a 52-week high and an all-time high. And we certainly, we have a position here, of course. And ARM, all-time high, and then you're having the slippage coming off of that stock. Not a great close. We'll see what happens the next couple of days. Uranium had an all-time high. So there's been some talk that there's a uranium shortage, and that seems to corroborate the stock's price here. So when you look at it on the daily and weekly, it's a little bit sluggish, but you look at it on a longer term chart, and it's at support. Uranium's at support. AXON, Taser, incidentally, is at an all-time high. They just announced a new product where retail establishment personnel are going to be wearing a camera, as well as in hospitals. The people that are employed by the hospital are going to be wearing a camera as well. And Taser, by the way, Axon, they are the largest user of AWS on the internet with Amazon. They're their largest client, I believe. Made My Trip looks especially interesting with that green line breakout that just took place a couple of months ago. I'm just looking for this stock to come back in, or put in a 2 weeks tight or a 3 weeks tight to get involved. This is one of those potential leading stocks that if you missed it, and if we get a pullback here in the market, this is something that you want to buy on the pullback, you know, like ServiceNow or other stocks that you might be looking at. And MMYT today closed way off the low, closed only down 3 cents. Very strong action today. United Rentals, all-time high. ServiceNow, all-time high. ASML, all-time high. See, these all have reported earnings as well, guys. So this is, you know, these are the names that I think that you want to concentrate on a consolidation to see if they hold up. I mean, the idea that these stocks did not go down, that's, you know, that's very telling. You know, and let's see here. Palo Alto Networks. And, you know, this is, you know, after coming out of this, you know, when you look at it on the monthly, coming out of this monthly digestion, this stock just hasn't run up enough for it to be over. You know, this stock is going to probably go much higher. It just hasn't had the magnitude nor the time duration that you would normally see a stock that's blowing off to the upside. It doesn't have that characteristic yet. ANET had ANET, which has been leading, and we have a very, very tiny position for one person with this stock, and they had a really disappointing result. The stock's trading a lot better than the numbers, which is interesting because ANET's been the first one that Wes and I have gotten onto, in this build out of the infrastructure of AI. Arista Networks is one of the first ones that we came to, but they don't have the explosive numbers that SMCI has. And it's going to be interesting to see again what VRT's numbers are. But this pullback may give you an opportunity to, at the 10-week, to buy it on the expectation that they're going to be building out. They're going to be a beneficiary of this. There's Powell with that great breakout on big volume, and that's it. So, guys, that's it with this part of the presentation. We'll, if you need to reach Wes or myself, this is our contact information, and that will be on the slide deck. And with that being said, let's talk about some individual stocks now. Let me move to MarketSmith, and we'll get to stocks that you guys want to talk about today. Does the green line breakout, does that make sense for you guys? Do you understand where the concept, where we're coming from?
Absolutely.
Okay. And back in 1998, and I went back and looked too, and that's when it was easy. So we're sort of got an easy dollar environment right now because the breakouts are working. And that's why we've tended to want to hold some of these stocks into the number, because you're getting some great payoffs, occasionally. And if we have a profit going into it, that's buffered our hit, even though we sold Pinterest, PINS, and we sold a Shopify today. And we still netted 11% on both of those after the hit. So that's not too bad. And when you get into a nicer market and you're taking gains, but you're getting kicked out of things, that is the environment that you want to fully exploit. So you can exploit this. Something good is happening here. A lot of stocks are setting up. You know, you can potentially increase your size as well. But we'll just see how the market holds the pullbacks. But the leaders are going to be not giving up too much here. And just as a point of reference, this is what we're holding. You can take a screenshot on that. And we had 20 names. We're down to 15 names now. So it's good when you get kicked out based on the market action being abnormal in individual stocks, and hold them, and hold these stocks as long as it's a natural reaction, which is what you're going through. There's nothing wrong with Palantir. It's on a two-day pullback. You'd want to see this stock. It's going to probably find support here at the 10-day in the next, couple of days. But, these stocks that showed themselves, these are the ones that we think that you can buy on pullbacks. The stocks that had explosive numbers went up, and you can buy them or add to them on the pullback, and you would be averaging up if you bought this on the pullback. If you bought it on day one, they're taking out 2186. IBIT, and taking that shelf out was a really good place to add it. Now you just sit with your position. So, as all of you know, no one knows what the price of Bitcoin is going to be a year from now or what it's worth. We have no clue, but we can follow the institutional footsteps of people like Fidelity and BlackRock that are, investing, and the general public that are going to be investing billions of dollars in this new asset class. And of course, we've got the halvening quote, coming up, in April, I believe. So that's supposed to reduce the supply of Bitcoins that are mined, makes it more, and it should drive up the price, just pure supply and demand. We'll see. Okay, questions, guys, on individual holdings that you got.
Yeah, one thing I have, Roy, is, it seems like a lot of times when I'm establishing positions, or either where I'm just looking at what's going on daily with things that I hold, I seem to get most of the movement between 4 a.m. and 9:30 a.m. How do y'all deal with that situation? Do y'all use those hours as a time to back out of something, or either establish a position, or is that something you just don't look at?
Did you say 4 a.m.?
Yes, 4 a.m.
It is funny that it seems like a lot of these stocks bottom, and Bitcoin, it bottoms around 4 a.m. So we're both aware of that, but a lot can happen between 4 a.m. and 9:30 a.m. as well. But it just seems like, as a note of reference, that many of these stocks do bottom like around 4 a.m. We have noticed that, and maybe it's because the Chinese market is opening, or I'm not exactly sure what's going on there.
Right, can we look
Thank
at
you, sir.
Monday.com, MNDY?
Yep. Now, remember, it's it's how the stock responds to the number, not necessarily what the number was. And you can see the stock really, it was down pretty large, yesterday. It came down to the 50-day and they bought it. And, they bought it, drove it all the way back up. So it's going to be interesting to see if this is going to be tennis balls or eggs, but it's very strong action. The idea that it took out yesterday's high today, and earnings are out of the way. They did sell into the number. They've got good guidance going forward next year, and if it resets itself, there's nothing wrong with this stock yet. It's setting up to be a buy again. You just need to build out the right side a little bit. And if it takes out today's high and goes to new highs in the next day or two, that would be very telling as well.
And if someone missed the boat for SMCI and want to take position, like is it I mean, is it still a time for that, or definitely we should wait for it to come to 21-day line or 10-day line, or what is your take?
You definitely have to let it come in, like the 10-day. I mean, nothing is going to necessarily happen. The 10 days over 100 points lower. So when you get a situation like this in West, and this is that ants formation that David Ryan talks about, it went up more than 12 out of 15 days. It went up 1, 2, 3, 4, 5, 8, 9, 10, 11, 12, 13, 14, 15. 17 out of 19 days, but it hit that ants, that ants formula. So that's showing you can see this, the wall of blue here. This is powerful buying momentum by Wall Street. This is not over. It shouldn't be over in a month. If they're going to be the de facto standard in building data centers, this is something. And again, the CEO came out and they said it's going to be months or conceivably years that they're going to be growing like they're growing. And no one knows what those numbers are going to look like, but that's important, the tenor of the CEO. So you have to wait for this thing to pull back. And the 21-day, if you're long it, you have to ask yourself, am I willing to take a 16% drop in one day or a 36% drop in a couple of days? That's the 21-day, and be totally right with the position, or so that's what you have to determine. If you hold the position, but it's certainly not viable. But I don't know if it's going to hold the 10-day the first time, or if it's going to go down to the 21-day. It's going to be probably scary. Back here, it did it a number of times before. It's got a history of doing that in past reports. So, it's going to, you're going to see it come in 100 points. I guarantee you, in a day. And then people will wonder, well, what's wrong? Nothing's wrong. It's just breathing. And the next area of support, it's going to be between that 10-day and 21-day. Institutions they'll definitely be buying at the 21-day, but that's also 200 points from where we are right now.
Sure. Thank you.
Welcome.
Hey, Roy, what about the same thing with NVIDIA?
This stock doesn't want to go down, either. And so there's the breakout. We all saw this breakout, and we wrote about it. And there's that 505 area. It was so obvious where it tried to go a number of times, and it finally got through there. this stock's not, this stock, if you're looking for like a 2 to 3 year build out, in AI, you've got 2 months of a build out. This thing has gone sideways, went sideways for months. It's only, it's only resolved that uptrend in the last 60 days. So it hasn't even gotten down to the 10-day. The 21-day is 645. And, you've had a couple of days where they try to fake you out, sell you out. This is in my view, this is the strong hands trying to get you to release your, shares for the big money is going to be scooping up the shares, on any little wiggle here. So I don't think there could be much of a wiggle, and there could be there could be an exogenous event. I suppose anything could happen, and when it could drive it down one day to like the 21-day, and you're going to see people buy it heavily right there. So
Roy,
I
how
think
would you play?
the runway. It's months. If it's that's the runway 2 years from here. 2 to 3 years.
Roy, how would you play NVIDIA earning report day?
We're gonna hold it into the number, and we're up in it 40%, I guess. And yeah, so we're gonna hold it into the number, and if we're right, you take that number and double that number. That's where the stock is going to go in the next year before it's over. I mean, it hasn't even gotten crazy in this space. If Microsoft comes in, it's a buy. If Meta comes in, it's a buy. It's just gotten started in this build out and so forth. The numbers are going to be terrific, for a long time.
Thank you. Last two reports numbers were great, but it went still down.
Who's that? Who?
This Alex. NVIDIA. Last two quarters, NVIDIA numbers were fantastic, but I think people expected more.
Well, it all comes out at the end. I mean, they had 2 great quarters, and the stocks had, a pretty big run from June of last year. All in all.
Yeah, thank you.
You're welcome. The question that we're going to all potentially have is, if you're in some of these, where do you re-enter if you sell them? Like, we own Spotify. We could have sold Spotify right there. And, great quarter, you got Wall Street with price targets of, $310. It's hitting an all-time high. We could have sold it there, but it would be very difficult for you to sell there and then get back in like today or tomorrow. As long as they're holding up, I think you can just grab some bench, just let them consolidate, let them work. I mean, you got Uber, there's a 3-day pullback. I mean, they got through the number, great numbers, and there's the stock. That certainly doesn't look like a stock that's under big distribution. You just want to see it just go sideways, build a little base, and then the next move is going to take you, from 73 to 83, and then 83 to 100, looking out, the next leg up.
Roy, in this, if you can please go back to Uber. So this 2024 estimate shows like 111%. So how reliable this thing, and how it can make like some contribution in making the decision whether this is going to be a big play? Like 2024 is 111%, 1.84.
Yes. Yeah, so the earnings, that's the estimates for this year, and you can see with the green triangle that those estimates have recently been revised upward. So, what got us into the stock was this stock was going to be profitable for the first time in years. That's what got us in the stock last year. So, you've had like about 6 years of them losing money every which way that they can, and now you're getting through that, and you're getting profitable. That's why we think that that some of these are still powerful. See, here's the green line breakout, and I just showed you a couple of examples, and you can pick up many examples yourself. We can't project that this is going to go up tenfold over the next 10 years, but I'm just pointing out some areas of interest where there can be some turbulence, but that turbulence could give way to a very positive outcome as well. So the history lesson that I want to share with you tonight is look at these stocks on your charts with weekly and monthly time frames in addition to your daily, and you'll get a different picture in many cases.
Sure, yeah, that totally makes sense. Okay.
Hey, Roy.
Yes.
Would IoT qualify as a green line breakout?
I believe it does. Yes. Yep.
Fantastic.
And we've tried this stock a couple of times as well. What's got us a little bit hoodwinked is it's expensive. I mean, expensive from a market cap standpoint. They're only doing $1 billion in revenues, but the market cap is 18 billion. That's rather high. That's really high, 18. But it also might be telling you something about their business as well. If from an optimistic perspective, like, man, valuation doesn't matter. That whatever they do, they're doing it right in terms of being in the Internet of Things and provide solutions for trucking companies and so forth. What they do, they must be really good at it. That's what I take away from it. But it is a green line breakout. So this is where you can get some of the most powerful moves. So I would definitely be stalking this one for sure. But there's the monthly. It looks fine. The weekly, it looks a little bit, I mean, it's below the 10-week right now. So it's sort of, you're going through this turbulence phase, see right there. But then you take a look at it on the daily, and it looks, it looks wide and loose. Look at, you've got all these patterns that have tried to set up, and it's just messy right now. Earnings are in 21 days. But it's a green line breakout, and it's right on the cusp of making that next leg up. So, watch for a style like this to be up 10% on big volume and provide you with a potential viable gap up when they report in 20 days. And I wouldn't be surprised. I wouldn't be surprised if we're buying the stock at 35, 37, $40, 3 weeks from now when they report earnings. But a pullback to the 10-month would be an interesting place where there's a logical support. That's 27, so that's kind of a nasty little pullback when you're looking at it from a percentage drop. BRT green line breakout, stock held up great. And this is tennis ball action here. So, remember the NASDAQ was down 300 points, and then you have a stock, green on the day after it was down 5 and it closed up 1. So that's telling you something. Spotify turned green today. It was up 3 today. That's telling you something. CrowdStrike up $1.15. GitLab, you could, 17 cents from going green. So this is where your shopping list should be, in my view and Wesley's view. This is where we're focusing. And you can see we had a lot of stocks that were they gap down big and closed, at the high end of the range. There's Uber right there. The Qs by no means are broken. They're just at the 21-day. Melly's building out this right side. Earnings are in 9 days. The numbers in Melly, they have just pristine numbers. Great numbers this year, 53%. I guess we'll get some flavor for 2025 when they report. But I love this chart and I love the numbers. Look at the numbers that this company's delivering. Triple-digit numbers. So, I can easily see the stock taking out 1,800 and going to, 2,000. Look at this, guys. Look at this, guys. The last time this stock was at 2020, they made $1.67. It was at $2,020 in price when they made $1.67. They're gonna make $35 this year. It was 2020 when they made $1. Oops. And this is the anomaly that we see in terms of it. Man, this thing's just mispriced. This stock is going to ramp, or they're going to miss the quarter badly, and there's going to have to be some kind of reset. But I love the numbers. These are big numbers, and you've got liquidity there. And what's that look like on the monthly? Look at this. See, there's your green line breakout. And if you go back and you take a look I'll pull up price line. See, when you think that, oh, it's 2,000, I'm not going to buy a $2,000 stock. This might be my biggest position before the number. We'll see. I do have a position in it now, personally. So there's that. Take a look at Bookie, BKNG. So look at these green line breakouts. That's when it went to all-time high territory. So 1, 2, 3. There's your first green line breakout. At all-time highs, and that was at 400 to 4,000. And you can see these green line breakouts essentially the whole way, the whole way up.
Hey, Roy,
Yes.
What about OSCR on the? It's like a IPO going
Yep.
through like the U-turn kind of.
Yeah. And that's the chart that we've been profiling from these IPOs that, these IPOs that do this. And we think that that's where leadership, the leadership, we're going to morph into all these stocks. And the big move on this OSCR, it's going to take place going from 30 to 70. So, I mean, look at this in the course of just a couple of months, just this move here. So it's telling you the environment's changed. And, I mean, there's no Bible base or anything like that on it. It's just you could have bought it there, right, Joseph?
Yeah. See what you're
But,
saying.
but now there's no clear place to buy it. And, and Wes has talked about this ad nauseum, that we think the real money is going to be made when Palantir goes from 40 to 80, not from 25 to 40. It's going to be from 40 to 80 when it gets into new high territory. And so a pullback right there would give you an opportunity. There's your pullback buy if it'll come into the 10-day and then turn up. And the chart that I'm looking at, the type of pattern, guys, would be something like this. See with this TSM came into the 10-day right here after the quarter. And then you could have bought it. And we're fully invested, or I would have bought it, but we didn't have any room in the end. But there's the pullback to the 10-day. And that is, I think, see, this is also up here. That's going to be a green line breakout. So basically what we're saying is that a lot of these stocks, you're going to get green line breakouts. This is just a consolidation area. See, Amazon's going to come back and take out its high. That's going to be a green line breakout way up there. Google, we think, is going to new highs. We just need time here. Now, the market's just, biding time as we, go through the interest rate turmoil. That's all the market's doing. But you're going to get to all-time highs, and then you're going to get this run where there's no overhead. That's why it can be spectacular, guys. You can have these big mammoth stocks like Meta, Google, and so forth that are powering ahead. And then you're going to have second-tier names participating. You're going to see the productivity gains. You're going to see IPOs. It's going to get crazy before it's over. But you're going to have to discount a lot of numbers by Microsoft and Meta and things like that.
On your DraftKings position, are you holding DraftKings into the report? I think they report like tomorrow. Or
I sold it. We actually have a swing trading account, and with the longer term account that we talk about a lot, and I sold it today at the open in my trading account.
Oh, okay.
But we're holding it for clients because we've got a profit in it, and we would potentially, if it gives us an opportunity to go from a 5 to 10% position, we might on the number.
Okay.
So, but I'm not stepping in front of it from quote on a trading perspective. but I expect the number to be good. They're going to be, you know, they signed a deal with Dave Portnoy and Barstool. So that's now it's out there, and they'll be talking about that in the conference call, I'm sure.
Roy, have you explored Kava, CAVA, Kava? It's
Yeah,
like
I love this stock, and you can see there was your buy point right there. See right there where I have that trend line. There's your buy, your first real base, you know, off the bottom. So there's your breakout. So right there. And then you came up here, then you could have drawn this downtrend line. It came in, and then it's just been strong. Earnings are in 14 days. I think they've got really good management. I think the guys that are from Kava or from Chipotle, I believe. And all I know is the CEO's got a good reputation in the industry, and I think I think you can cookie cutter these restaurants. I enjoyed the 2 times that I've been in there for and eaten. So, and it's got 58 to make an all-time high. I mean, I like it a lot, and you know, if it goes through that that's an all-time high there at 58.10. And you've got earnings in 14 days going through 58.10. There's going to, you know, that would, I think, represent a time to, you know, to add to the position, to buy the position. There's going to be some turbulence though, and you know, numbers are really good. They can grow forever ad nauseum, good management, stocks acting great. I think that, you know, this could be a big stock down the road. This could be one of those stocks you buy here. It's up 10-fold in 10 years, you know, when you look back on it. There is a quality to their you know, to their organization. You know, it is quality. It's not some fly by night, you know, wing joint that's can, you know, fold next week.
yeah, they have like a inside stores. They have similar lines like Chipotle. Looks like people are liking it, and so
It makes a lot of sense on a fundamental side. It certainly does.
And Roy, how are you handling ARM? Like, are you? It is like very shoot up and then came down and.
So we have a big position here, 8.5%. And we're up in it like around 100%. And we did not sell yesterday. We didn't sell today, but we're trying. We don't think it's over. You know, this breakout, I don't think that's a blow off top. But it's so, the history is so short that we don't know, nobody knows what it's worth. You know, they're taking the numbers up, but you're kind of going through this phase where you don't have enough information to make a decision. But I don't want to take it to the 10-day. I was talking to Wes, and that's 100 from where it is right now. What you would like to see, you'd like to, for this stock, it's showing up 2 tomorrow so far. You'd like for this stock to not violate this low, today's low, and then you could put a stop in it. So if we're up 2 or 3 or something like that, we might put in a stop for half of our position, you know, right there at, you know, 117. And, but, I don't know, we don't have regret missing that sale right there. This could turn out to an SMCI, that just got, it blasted off, came in a day, and then this thing could take off tomorrow for for all we know. So,
Roy,
we've taken it to hold, we're hunkering down. We want to hold it. We think it'll go appreciably higher, in the next year. Not in 150s can be at the low end of where we think the stock should be valued a year from now. So we'll let the stock tell us. There was no clear violations yet to sell, although you had the sloppy day, messy day today with the market. So.
And did you enter before earning or like after earning?
We bought it right here.
Oh, okay. You have like a lot of patience. Yeah.
Roy, I'm in this position too, and I didn't sell it either because I don't think the run's over as well. I hope
really?
we're both right. Yeah.
How are you handling AMD, please?
We don't have it. But this is where we bought that ARM. We bought it at 65, and then we bought it at 6. We averaged up at 69.
Mm-hmm.
And it got squirrely like in here. We were in it at 65, 69. And then we got the payoff. We didn't sell right there at 80, and then we, blasted through. What was the question? What was the last question?
I was gonna say the lockup on ARM. Are you worried about that because SoftBank owns like 90% or whatever?
Yeah. I mean, ideally this thing, we rally from here, and and I can put my stop in today's low. That's that's the ideal. And then if it moves up here to 140, 150, we'll sell a little bit more and just take some more off.
How are you handling AMD?
Oh, AMD. This is I wrote about this. This is a green line breakout, guys. And, I think the numbers didn't impress me. Nothing that they said in their call impressed me. Compared to what NVIDIA is delivering. I mean, they're way behind in AI. I think they were going to do 1.5 billion in AI semiconductors, which is nothing compared to NVIDIA. And they just don't, but you can have more than one player, right? You can have your AOL and Yahoo. You can have NVIDIA and AMD. Could be Broadcom and NVIDIA. It could be AVGO and NVIDIA. But anyway, the setup here, it's a decent setup now. There's your downtrend line. It held the 21-day. So if it gets tight here and then breaks this downtrend line, that would be a trade. That'd be very beneficial, I think, taking yesterday's high out. So you'd like to see this thing set up. Don't take out. You don't want it to break this 21-day. See, it's held the 21-day all the way up. So you don't. If it broke it for a couple more than 2 days, that would be abnormal. Wes and I really watched a lot of times this 21-day to see if it'll find support the second day. And a lot of times that coincides with the 10-week too. But setting up nicely, these numbers are by no means, warm and fuzzy. But the market is looking to the future, not what they did clearly this quarter. So.
Roy, doesn't the market scare you in terms of PE and the future and the rates are going up? No, not at all.
No, it doesn't, because O'Neill never was concerned with PEs, and because great growth companies, they're never cheap. Amazon traded at 1,000 PE, an infinity PE, because they weren't profitable for many years. But if you didn't, but if you were just using the PE as a measure, and if you were looking for a company to check all the boxes, like sometimes when you have IPOs and the companies are putting their money back into their business, they don't have earnings anymore. They don't have earnings yet. And that is something that's different from O'Neill's fourth edition, that it was published, probably 10 years or so. A lot of things have changed since that initial study and identifying, the characteristics of CanSlim. And because I think we will find more and more biotechs this time that have powerful moves that don't have earnings yet. And so if you just say, I'm not going to buy anything that doesn't have earnings, you can miss some of the biggest winners.
No, I agree.
Relative strength is the most important thing. Yeah, go ahead.
I agree, those stocks may be good, but what if the market chokes?
Well, if the market chokes.
Yes. And stops. Yeah.
Well, the market's the market's always moving up or down. You can always have your stops in, and you're going to be stopped out in ideally in a downtrend. That's insurance, and you're going to ride and let your winners run as long as they're profitable. When you're off to like a great start like this, you don't want to get rid of the merchandise that was that you worked so hard to put on, to just flippantly hit a button and you're out in like one day. So, being a trend follower, you're always going to have to deal with market gyrations. And that's why the art is so not just persistent, but pervasive for great traders. It's a lot of it you can't necessarily teach.
So can we look at this Workday stock? It's moving up.
What's the symbol, please?
WDAY.
Oh yeah, Workday. Yeah, so they're in the human resource area. They had a great quarter, and the stock moved up. They're actually reporting earnings in 13 days. So you've got that to contend with. The last time they reported was a great quarter and the stock was up materially. And there's just really you would think that it would be a great quarter the way the stock is acting, but you just never know. So earnings are in 13 days. If you're in it, certainly you've got a nice cushion. And yeah, look at that. That's all-time high. That's very close, if not there, and into all-time high territory. The reports that I've read, it's the semiconductor firms, and also the people that are building out the infrastructure, the SMCIs, VRTs, the ANETs of the world. They're going to be the big beneficiaries. Maybe, Dell may grab some traction here, IBM for sure. But this stock has acted great, and you couldn't tell this stock is, it's that anything's wrong. So this stock's holding up great. It looks like it's showing you that a great report is on the way, but you just never know. It's got everything you're looking for in terms of the earnings growth, the relative strength. At a new high, 99 earnings per share rank, composite rating 99, and it's got institutional liquidity as well. You know, ServiceNow is in that area, you know, in that group, and ServiceNow, look at this 2-day move on ServiceNow, taking it through the 21-day. Now, these are leader defined days. Like this stock's not in any trouble until you take out that low. So like you have if you're watching the stock, trying to draw this trend line. If you're watching the stock, this gives you an opportunity to get into it. Excuse me one moment while I draw that. Trying to draw that. But that's something to defend. You have an area that you can defend, which is good. So I mean, if this stock would come back down and drift, say the market has additional follow through, you can see where it had support, big support before. So you can probably have some institutions that step in right before that area. It should not take out that low. And, so on a leader, defining day, like this ESTC should not take out that low. But look how hard, and this is the decision that I mean, perhaps you'll have to make that decision moving forward. But this stock made a 52-week high only 2 days ago, so it's tough to sell right here and then guess that you can have this kind of pullback and that you can act quickly enough to buy that same thing back. And plus, we didn't know how it was going to react. That you're going to get a reaction like that. So, my advice is to prune your weakest performers and, hold on to your strongest participants.
Royal, can you take a look at the stock FICO?
Yeah. Now, this is a credit agency, correct?
Mm-hmm. Yes.
Yeah. I mean, this stock has been in this nice uptrend for how long? Man, look at that. Wow. And look at it here at 400. See, I'm trying to find a couple of these guys, see, where you had a green line breakout right there. And, I don't care what the price is. If Melly can go from 1,700 to 3,500, that's all that I care about. So this is that Fair Isaac that broke out there at 500. Now it's 1,269. There's just not a lot to say. It's in a perfect uptrend. You got support right there at the 10-month. And it's been in this nice uptrend. I mean, beautiful. Until you would take out like a prior low like that, right there, the stock, should be, in my view, it should be held. There's no base to buy it though. Like here, here you could have bought it coming out of this 4-week base there, but it's not a buy. It's not a buy in here at all. The base isn't setting up properly. So it's kind of, so it's made this up real quick too from this big break, made that up. And that's sort of that's a cautionary signal on the weekly. Down big and then up big. I don't have anything not a lot to say. It's in an uptrend. There's nothing to do. It's been a great stop. It's, and it's, definitely should be held here.
Okay.
Supports 1200. I mean, nice job.
Hey, Roy,
Yes.
how about PDD?
This stock was holding up great, and it's despite the Chinese market. Now, something is, and I normally don't do this, but I did buy China a couple of days ago just because I've never seen a market hated more, and I hate it. But I'm looking at, well, what is it telling you? So PDD is broken. It's below the 50-day. It's rolling over. If you get a bounce, it should be shorted because it's the 50 days rolling over. You're gonna have it like an angle warning there. It's gonna be too quick. It's below the 10-day, below the 21-day. Now it's got its work cut out for it to get back over the 50-day and get the 50-day to turn. And if you take a look at like PJG, PGJ, PGJ, and there is your follow through day 12 on the Chinese index. So, this is like October of 2022 in our market. I mean, you can't find an index that's just hated and, where you're reading all this negative stuff about China. I mean, it's people are just spewing with venom. And I mean, I'm the same way, but I'm seeing the 12th-day follow through right there. Everybody hates it. And I took a position right there. And that's what I'm going to use for my stop. So it shouldn't come back into the follow through day. It shouldn't undercut that follow through day, but there's where my stop would be. And I'm actually in the K-Web, KWEB. And so rarely do I ever do this, but there's your follow through day right there. So it's more to just see, okay, is this going to work or not? That's what I'm focusing on. So but there's your follow through day. See right there, day 12, you got to move up and look at when you got the follow through day back here. When you take a look at it, so you got your follow through day 1, 2, 3, 4, 5, 6, right there at 20, and you got to double in 2 months. So, it's as hated as it is, you can get a trade here to 30, move from 25 to 30. That's all that I'm looking for there.
Roy, can you please check TEAM Atlassian? I mean, they got decent earnings. I'm not sure why it all of a sudden went down so much.
Yeah, this definitely should be sold. And it should be sold the first day. I mean, when you get a move like that. And remember, it doesn't matter. And I'll show you two sales that we sold recently too. So it doesn't matter what the earnings are. What matters is what happens after, or what happens, the reaction to earnings, what happens after the fact. And here you can see the stock got crushed. It should have been sold, going through all these averages on big volume, the biggest volume in the base. This is the biggest volume that it's traded in the whole base going back over a year, and that's downside volume. So when you don't sell and you get this little limp leg rally, that, you know, that gives you another opportunity to sell, and it just deteriorates. So this is definitely a sell. And I'll show you the two. This is what we went through. Okay, so we bought this. We bought this pins probably. I'm guessing right in here. And so we had like a 20% profit going into the number. And some of these have gotten crazy on the upside. And Pinterest, Amazon we had a good number on the retail side with what we expected. So we expected Pinterest and also Shopify to have good numbers too, because also those stocks didn't sell off when Amazon's results were released. And we know, we know that Amazon has a big deal with Shopify. You know, that's they're the biggest merchant on the platform. So we sold here, even though it came back during the day. We sold it because of the violation, breaking on volume. And this is, I mean, ideally, this is what you want. You want the stocks to take you out. And you're not guessing that, we're not guessing and selling that, the little surge there. We're looking for something that could go from 35 to 70, not from 38, 39 to 42. We're looking for something to go from 40 to 80. So we didn't get it. We didn't get the report. We didn't get the response that we wanted. So we sold this with an 11% profit. So we still had a profit. So ideally, those are the kinds of things that you're looking for. And we sold Shopify today. So we sold this Shopify with 11%, and just horrible action, closing at the lows. And normally when you see something like this, it's going to work its way lower. So that definitely looks like a bull trap. You got faked out, Kaiser Soze reversal, whatever you want to call it. But that's definitely a sell right here. And we sold. And fortunately we had some, had some profits built up. And so, had a 10% gain, 11% after selling. So that's an ideal situation. So your stocks are taking you out, not, you're not guessing that, that's a short-term high.
Is your rule like, doesn't matter how good earnings are, but if it's sold off with heavy volume, then we must get out as soon as possible.
Yes. Yeah, particularly if the stock is down on heavy volume and it's going through a critical support, it doesn't matter what you think about it. It doesn't matter what anybody says on Wall Street. Like that day, right? Today, and we sold up here at 81 on the bounce, and I think I put that on my Twitter feed that we sold. I'll show you where we sold it. See how you got this bounce.
Mm-hmm.
So we got this bounce and sold the bounce. Got the bounce, sold the bounce, and we're out. And then it closed, very poor. And a lot of times the first sale is your best sale. That's an old adage, in the market.
Roy, can you look at Shopwave? It's going to report earnings soon.
What's the symbol?
SWAV, Shockwave.
Yeah. This is a stock that we've owned before in the past. It's got life after death. This is death. It's off the mat. So it looks like it's been, looks like they've turned the corner. Earnings are in 2 days. No idea what they are. It's back above the 200-day. So this would be a real tough one to hold going into the number, considering that it blew up last time. And that's, you know, you never know. Maybe the number is going to be great and everybody's expecting it to get blasted, and it does what SMCI did. It just takes right off. These are really, there's no right answer on this. But it's definitely, with this chart pattern, it's definitely a gamble holding it into the number. There's Wes and I mean, we've been going through just all of our lists. Boy, there's not a lot of stocks to buy that are, that aren't extended. We just need for them to, we need for them to come in. Like, we love this MMYT because we think India's going to be, India's going to take a lot of business that China got. India's obviously got a lot of advantages with the population, number of people, English speaking, and so forth. So this MMYT, great numbers, great earnings, stock looks great, set a 52-week high, and INDY, I think that index is at all-time highs as well, close to it. So the indexes have been performing well there too.
Hey Roy, what are your thoughts on snow?
Like it. Oh, by the way, we sold this on day 2. And by the way, Lilly and Morgiano, I think what was their, I think they did $2.1 billion. They went from 300 million the first quarter to over 2 billion of Mounjaro, and also the weight loss Zepbound, that tirzepatide, in the quarter. And so we sold right there because we thought that we had 2 faster horses, and we do, and that's Palantir and Bitcoin. But this has got great action, and this stock's not giving anything up. It makes me believe that, man, you have a long way to go. I mean, everybody's going to be on Ozempic and Mounjaro, I think, before it's over. Just think when prices come down, that's going to be years. But man, these guys are doing half their drugs in this one category, half their revenues in this one category. It's amazing.
Does the base for Eli Lilly concern you at all?
Does the base?
Yeah, the most recent base, I think that might be a stage 4 base.
Bill didn't really talk a lot about it, about those. Let me see. It looks like we undercut their stage 5, but I don't really count them. At one point I did, when you undercut, when you're in one base and you undercut the low of the prior base, that's when you go back to stage 1, right? And we haven't done that in a long time. It just shows you these bases can last for years. So I don't look at them that often. If like at the end of a move in the market, if we're having a bunch of like stage 5 bases, that's that's gonna raise my suspicion and concern, but this pattern doesn't concern me. It's very strong. I'm considering buying this back at 746 right here. But probably a trade, not an investment. But I would want to get back in it if we come back to the 10-day or 21-day as well. So this is where you like, how cute are you going to be? There's where I got out. Now, if I get it in, I mean, I sold right there. And it's gonna be interesting if I'm chasing it at 800 and I got out right there, and there was no reason to sell it. Didn't have a great close, but there was no reason to sell it. It hadn't violated any rule.
What about Decker's Outdoor?
This concerns me a little bit more just because of the move that's taken place, and you've had an extension. It looks like you've had an extension of the move. The numbers are just great though. It also shows you to not get. I mean, if you look at ANF, and we'll get back to Deckers and look at who else did I want to profile in that area? ANF.
On, I think.
Yeah. ONON. I mean, nobody's talked about Abercrombie, and this thing's going from 22 to 100. Oh, same thing like Elf came back, and I've been watching this stock all year, and it's rare that you would get this type of sell-off and that it would come all the way back, and it has. And the numbers are blistering. The numbers are still off the charts. And look at the market cap's only 9 billion. And look, this was a $20 stock 2 years ago.
And everyone uses Elf that I know. That's a
really.
Yeah, it's like super because like it's super it's efficient, but it's cheap. It's cheaper than the other makeup products.
I mean, you would wonder. I mean, if you go to the who are the upscale people? Sephora and somebody else.
Ulta Beauty.
Okay, yeah.
I
But this
think
is
it's popular on TikTok.
Elf is popular on TikTok.
Uh-huh.
Oh, really? Wow.
That's what CNBC says.
Oh, really?
Yeah, that's what they said about ANF's popular on TikTok too. That's why they're saying ANF keeps going up. It's like a TikTok trend. I guess people are into the brand now because of it.
Well, hopefully they'll get into Bitcoin or something like that, and we'll just ride that to the stars. But some of these can be quite testy. I mean, this, I could never hold this stock from 140 to 95, much less 88. And but that's how, since November 1st, that's when the environment changed. This is really where it changed from these lows in the market, the last 3 months. And ONON, great shoe, just like Celsius, great product, but it's languishing. Poor relative strength, 77. I can't wait to see Celsius's numbers. Earnings are in 23 days. I've never seen a company with such great numbers that can't get going either.
And it has high short interest as well. I don't know how the shorts are in this still, but
Yeah. Yeah. So what you need is you need something, you need a shocker. So you need some kind of blow away report that, it doesn't matter where the buying comes from, but it's got to create some fear in the shorts based on the report, the way clearly SMCI did for those that were shorted going into the number.
Could you please get back to Decker?
Yeah. Earnings gap, it moved higher. You got the pullback here. The strongest stocks, they're going to just stop right here, at the 10-day when they gap up like that. But you would prefer to see this kind of action. See on day 2 where it follows through, where you bought it here and you're immediately profitable. Here you had this, here, this is how the characters change. This is reminding me of net today. See, the strongest act like this when it reported there in October, not coming back in like this, it makes it less strong. For example, see net, you don't see this is less strong. And while it had that 10-300 day right here, the last 2 days have not been good to the stock. That's showing underlying weakness, and you should have taken out that low of yesterday, and you did. So that's a little bit concerning. And versus like an ASML, see, it followed through day 2, day 1. You get the follow through. Now you have the pullback to the 10-day or 21-day, and it's at a higher level. So if you bought it here, if you just bought it here, you could be averaging up, right here at the 10-day or 21-day. That's a much better, much stronger chart. This is, I love this chart, by the way. This is Emerson Electric. And there are a number of these EME, Ingersoll Rand, that's kind of going on our pile that are hitting our screens. But this is CanSlim at its best for, Emerson Electric. So there's the breakout on volume. It's through this congestion period of time. Look, it didn't take out the day 1 gap. It just came into like the 5-day, and now it's turning up from here. This is the kind of setups that I'm observing or wanting to make purchases on. So it's not necessarily to buy tech on weakness. It's to buy something like this.
So what do you
that's hitting the new high list. See, there's MCore hitting the new high list. Green line breakout.
What do you think of IBM then? Do you think
Yeah, I like it.
But it has the same weakness you mentioned?
Yeah, so that's I said I liked it because I knew how it traded here. I haven't looked at it in a week, but this isn't the greatest action coming all the way in here. Now it looks like it's going to the 21-day. So is it going to hold the 10-day, 21-day? I mean, it needs, it just needs more time here. Great report. And it just needs to build, build this right side. There's no pivot on it in terms of where could I rebuy this? You wouldn't really buy it taking out the high of 2 days ago. That's too short. You just need more of a base right there.
Roy, can you bring up ANF, please?
ANF?
Yeah. Got
Yes.
a question. Yeah, that's a great stock.
Yes.
the thing is, if you look at the forecast,
Yeah.
you've got a huge growth in 24,
Yeah.
22,000,
Yeah.
and then it drops to 5%.
Yep. Yep.
So how do you interpret that? Or does
Well,
anything beyond the quarter, is it not important?
it is important. And in fact, you're at some point when earnings peak, and it could be this quarter, next quarter, the stock's going to peak before the earnings peak, or coincidentally with that. So like it would like for this stock in 22 days to gap up and have a big reversal day would signify that it's over short term for the stock, where it could come in 20%, hasn't done anything wrong, but that's a very perceptive case that you made there in terms of the earnings. And sometimes those earnings, Wall Street, they're very, very short. The numbers aren't right. They have no idea what they're going to do 2 years down the road. It's just something that's been put in an Excel spreadsheet and to throw out the information that you need to throw out to write a report. But I mean, Wall Street, as you guys are aware, that all the analysts, they're there to keep their job, and they're going to keep their job by just being, conservative and no surprises for their clients, and then be able to be in a position where you can constantly raise the numbers. But at some point, when you get stocks that blow off after they've gone through a true market leading phase, they're going to peak like Zoom peaked and Teladoc peaked, and it's instructive to study those cases, the way Tesla peaked and so forth. There's, to me, a style like this, it's shown no worries whatsoever. That would just make me, that's why I would be a little bit anxious if I owned it. I'm up fivefold in it, it hasn't given you any clue to sell yet. It's still going up.
Yeah, when Zoom had earnings that like back in 2020, it was like 999%, and now
Yeah.
the top.
Yeah. Yeah.
So yeah, it could be sell the news sometimes.
And that was the top where earnings were 999%, right there at the top after that big move. And, notice technically see it, at that top, it took you 3 weeks before you broke the 10-week, if you're just using the 10-week to keep you in. So there's your sell point. And if you got in it, wherever you got in it, if you got in it there or there, right there, look at green line breakout. You had that move. So, and we're trying to identify some of these stocks that we can hold for a move like this for 2 years. But when you look at it you look at these the weekly, it looks better. Then you pull up the daily and it gets dicey during these periods of digestion.
Roy, what is your thought on Microsoft? Oh, okay, you can check this.
Microsoft is one of the first ones into all-time high territory. It's really the gorilla. It's really the gorilla in this, in the category. It's a category killer. I mean, Meta too, but the style looks absolutely great. When I look at it, when I look at the stock and think about, well, where can this stock go? See, there's a green line breakout. I mean, gee, pick a number. I mean, is it can go from, I mean, it's can go to, you know, it's can go to 500. That's 20% from here.
3 trillion, close to 3 trillion market cap. I mean, I have been holding it since I think my average price is close to 200 or something. And I was debating, like, can he be, can he still get advantage of AI and all these kind of boom, and can do like another 50% from here or so? What do you see? What's your opinion about this?
I didn't get all of that. You were cutting out on
Oh, I'm
my.
sorry. I'm sorry. So what I was wondering, like, I have been holding this for a while, and my average price is close to 200, maybe 210. And it's definitely a nice profit cushion. But can this still be a good play for like AI stuff?
Yeah.
Cloud, AI?
Yeah, I think it's a great, and you know, the only reason that you would sell something like this is to get on a faster horse, and it would be because of your boredom, not necessarily because it's done anything wrong. So Microsoft is by far, I think they're in that pole position because remember they put $10 billion into open AI, and they're monetizing, you know, their generative AI, and you know you're going to have a chat GBT button on the next keyboard. And I mean, Microsoft is definitely right where they position perfectly as a major company in the whole scheme of this. I mean, Microsoft, Meta, NVIDIA, and Google and Amazon will catch up. But Microsoft by far number one holding where it could, this, you know, you can be up 25% or more in this stock this year. So, you know, it could come down, you know, last month's low was like 350 or something. But, you know, it hasn't done anything wrong. It's just, congesting the move. It looks fantastic.
I mean, I was mainly concerned about its market cap. It is over $3 trillion company now, and how far it can go. I mean, like that. So,
well, you know, I mean, no one thought that Meta could be up 20% on its market cap in one day, and that was incredible right there.
yeah, that's true.
So, you know, so they've got a $1 trillion market cap, and you know, setting up again. But you know, in this Meta, for example, every time it's reported, see, it came into the 10 and 21 days. That's why I haven't, you know, I'm not really a buyer on this Meta yet. See where it's come in after every earnings report. You know, it's coming to the 10, at least the 10-day. So we'll see what happens here in the next, you know, week or two with this one. But I would look for this to hold here at the 10-day just to get real tight with an absence of sellers. But the people that just bought it, the people that just bought it up here at 460, they're not looking to flip it and make 2%. They're looking at, you know, it going from 460 to, you know, 1,000. You know, they're putting, you know, that serious institutional money was put in that day.
How did you see earnings on the thing? Could you please
Earnings on
the chart, on any chart? I'm sorry.
Yeah, this is earnings down here. These are the quarterly numbers.
Oh, okay. I'm sorry.
And this is revenues, the
Yeah,
bottom number, sales revenues. So earnings. I mean, it's, you know, if you see, listen, guys, if you see what the earnings that this company did and the reaction right there, I mean, I'm just wondering how big can the reaction be when you have earnings like this, you're good. I mean, you know, I mean, for a $1 trillion company, this is amazing to have this kind of revenue and earnings growth. I've never seen it. I've never seen this in my life. I haven't seen numbers like this for a company that's been out there 10 years, that's had sequential growth like this.
Roy, my question was, how do you see earnings on the chart? I know you got the data down. Do you know which date it was declared?
Oh, on earnings, I click on it and look. Like there's the earnings report in November.
Okay.
You know, a lot of them, they're going to be around with the volume spike. There's the earnings right there. Earnings right there.
Okay.
And this makes me a little bit nervous. I mean, if Nvidia goes to $1,000, how much, you know, are you going to have everybody in Uber and the taxi cab drivers all talking about Nvidia? That's going to probably be on the cover of Time magazine and Barron's and all that kind of stuff, you know. So, you know, that could be the jinx, you know, the magazine jinx.
We also haven't had all those this is why I don't believe we're close to a top, because we haven't had any of like the AI IPOs like going crazy yet. Like, you know, a lot of IPOs coming to the market saying they're AI.
Yeah, guys, did you see where FTX, you know, that's Sam Bankman-Fried, that's his dissolved company, that they're actually, I think they're going to be able to pay off all of their shareholders. Did you guys see that? Excuse me.
Yeah, and I was wondering where they got the money from.
They got the money. They put like a lot of money in a bunch of AI plays, and those investments have gone up like 5 and 10 fold. And so that's where they got the money from.
Oh, wow.
And you know, so I think there's an AI outfit, Aurora, that, I mean, there's a number of these outfits that are out there, and they targeted a couple of these leading firms, and they got it right. So that's where the monies can come from, which is, I mean, you know, fantastic for the shareholders.
Roy, do you mind sharing your watch list, like, or like a couple of stocks from your watch list? Like, what are you watching right
Yeah.
now? Thank you. And is it okay if I take a picture of it?
Yeah, of course.
Sure. Thank you. Thank you.
Oh, there's Snowflake. I meant to pull that up. So this is sort of what I'm watching right now. And we're long here for clients.
Mm-hmm.
And
are you guys series, what is that called, 67 or 65 license? That's what you guys are, or
yeah,
you guys are, okay. And is there any like a minimum amount what you manage, or?
Yeah, our minimum is 250,000.
250,000, okay.
And yeah, if you're interested, just send us an email. We'll send you our marketing information that you can go through, and you can read about style and how we manage money and so forth.
Okay. Sure. Okay.
So guys, that's pretty much it for me. Again, I put a piece in on Twitter talking about America's greatest opportunities. And there was a piece that IBD put out, 70 charts, and O'Neill, I think, selected these charts himself, if I'm not mistaken. And the whole crux of the matter was looking at weekly and monthly charts, not just daily, because I think that we're on the beginning of a major bull market in growth, and you can see the IBD 50 breaking out. And you can see the rotation that's taking place under the hood. So the ones that are going to, be the big winners are the ones that are going into all-time high territory. And we've already seen some of these, like Palo Alto and CrowdStrike, and just a number of NVIDIA, a number of these. So I wanted to just point that out to you so that you could, and as you go through these, you can recall that it's important to look at the monthly as well as the weekly, not just the daily charts. And with that, guys, I think that's all that I have for tonight. Hope you got something out of the presentation. Thank you very much for attending. And we will see you next month. Same time, same place.
Thanks a lot. Loved it.
Hey, thank you so much, Roy. Like you are doing a great service. Thank you so much. It was very, very helpful. Thank you.
It's always amazing.
Fantastic, guys.
Thank you, Roy.
Welcome.